This video is going to be the outlook for 2025, and I'm gonna try to look for or to forecast the year 2025. Recently I wasn't really active on YouTube because it's holiday season. That's number one. Number two is that I was recovering from a really bad cough. So this is just like a small update on why I haven't been uploading YouTube videos in the month of December. Alright, so let's start off with the yearly chart for the three indices. Now this is 12 months. Okay, and then I'm gonna outline the range for the year of 2024. Now over here you can see that we are still bullish ever since this origin right here. We're still expanding towards higher prices, and for the month of 2024 we have closed above this down close candle here that has tagged this fair value gap with the SMT on the lows. If you compare it with NQ, and then right now we are pushing higher. So since it's Q3 of the entire 4-year cycle of the US president elections, I am going to lean towards bullish in the first half of 2025. So what I want to see is a stop hunt around 25% level, and then we move higher. Preferably we don't take out the highs first, right? So from the open we just drop down, take out some stops, and then we trade higher. If we are going to be really bullish, we should form a fair value gap with the year 2025 candle. If I'm anticipating bearish prices, then I'll look for the high of 2024 to be attacked first, and then we reverse lower. The probability of that happening is quite low based on the current yearly order flow. If we ever get into discount, and discount meaning if we tag this down close candle here, I need to see immediate reaction off of it to remain bullish, because preferably, as I've mentioned, I want to see a fair value gap form using the year 2025. We have 2 years of moving higher, so the third one shouldn't be an issue before the fourth one becomes a down close candle. Okay, so this is what I'm anticipating for the year 2025 for future indices. And if we take a look at the range of 25% dropping down into the weekly chart, we can see that it's right around this low right here and this relative equal lows down here. So I believe the next quarter we are probably going to attack this lows down here for ES and the lows down here for NASDAQ. On the 3 months chart, we have the inefficiency right here. We have the wick, right? So wicks are gaps as well. So I'm going to use the most recent one, which is going to be this wick right here for ES, and this wick right here for NASDAQ. We also have this inefficiency down here for ES. So that for next week or the month of January, I think it's very likely that we are going to attack this inefficiency down here based on the candle's closing price. Okay, so if we drop down into the weekly time frame, so if we drop down into the weekly time frame, you can see that the 3 months fair value gap is actually this lows down here. So it is very obvious that this would be the draw on liquidity for the first quarter, which means from January to the end of March. Alright, so I'm going to be focusing on this level here in the first quarter, and that's pretty much it for the indices. Let's move on to the Forex. Right, starting off the yearly chart, same thing. We are still trading inside this year's candle, which is the year of 2022 for the dollar index, for the euro, and for the pound. So moving forward, this is the second candle that is forming an inside candle. I would be expecting the next candle here, which is the year 2025, to expand away from this high. Right, so expand towards this high and away from this high, and that would bring us to this swing high right here, which I have been looking for since the year 2022. Alright, so this is a really long-term play, like a long-term setup, and what I'm leaning towards this is that this gap is probably going to be left untagged, and we're going to be very bullish heading into this swing high here. Now, even if it wants to tag this level first before moving higher, it does not invalidate the entire bias. We're still going higher, okay? But because this candle here is not refusing, it's refusing to take out this candle's low, and when we take a look at pound, there is SMT. So I believe that this is going to be a breakaway gap, and we're just going to continue to expand higher. We have also closed above this bearish fair value gap right here in the year 2024. So TLDR, I'm still bullish on the dollar index, and that should mean that it's going to be inverse correlated with the other assets denominated in USD. Bull run for the dollar. Right, now I'm going to move on to stocks. The stocks on my wish list, not wish list, but the stocks on my watch list. Right, I'm gonna move down all the way here, and if I don't cover anything that you would like me to cover, you can leave it in the comment section down below. I might want to cover, it depends, right? If the chart is nice, I'll cover it. If not, then I don't want to really waste time on it. So I'm going to start off with the 3 months chart for all the stocks, and if I don't get anything on the 3 months, I'm going to look at it from a higher time frame. Right, so for Apple, we are pushing all-time highs currently. 12 months, we are utilizing this down close candle here. We're really bullish, so nothing for Apple. It's going to push higher and higher. There is no inefficiencies on the 3 months, and there is no inefficiencies on the 1 month as well. So Apple higher without any pullbacks. I don't anticipate any pullbacks, and even if it pullbacks, to me it's a very difficult to see where are the good buying points. Right, so moving on. Nvidia, I think it's going to be the same. Right, higher prices. I don't like the fact that it has closed below this swing low here, because by doing so it is opening up the possibility of trading down into this wick right here, and even this low down here. That would be the fair value gap, and then it can continue higher, right? So overall, we're still bullish, or really bullish, parabolically bullish on Nvidia, but this close here is not looking as clean as it should be. It is also not closing above this down close candle, so even though it's closed above the opening price, I would always prefer it to close above the entire candle. All right, next, Microsoft. Bullish in a way, but not that bullish, because as you can see here, we have tagged the fair value gap, we trade up, and then we closed back down inside the old high. Right, so this is the old high on the monthly. It opened up, it traded higher or lower. Let's see. The old high, it's the month July, August, September, October. Okay, so this one, it attacked the high first, and then it came down to attack the inefficiency. Then it moved again to attack the old high right here, as you can see, and it rejected. It's the rejecting of that old high. So to me, on a monthly time frame, Microsoft, it's probably gonna reach into this inefficiency down here, because it seems like this fair value gap right here is not enough to push it higher. Okay, so slightly more downside for Microsoft, but overall the bullish narrative is still in play. Google. Right, so we have it reacting off this inefficiency, traded higher above this high, but failed to close above. Right, it's returning back into the range of this down close candle, dropping into the monthly time frame. It might want to return back into this inefficiency down here. I'm not too sure, but we'll have to see if it attacks the high first next month, and then if it does, I think it's probably going to retrace. Right, anticipating retracements for Alphabet, but I don't have any good buying entries. Okay, no buying entries as of now, until we close above this candle's high, because that would validate this candle as a proportion on a block, because it has reached into this consecutive down close candles, and it didn't tag that 50%. Right, so 50% from this low to this high, that's right here. This down close candle did not reach into 50%, so that makes this a valid proportion on the block if we are able to close above. Right now, if I really want to be aggressive with the proportion on the block, I can use the opening price as an entry to attack this high, but it's not really worth it, because we're trading all-time highs. I don't try to buy highs, I try to sell highs, and I try to buy lows. That's the rule of the game. Right, so next, Amazon, same thing as the other three that I've covered before. Fair value gap. Now this is slightly more bullish, because we have closed above this down close candle here. Okay, so this could be utilized as a proportion order block, and if that's the case, the last stop hunt was down here, this swing low. If I were to use the low to the opening price of the last order block and I project it, I'm looking at a possible target at 4th standard deviation. Yeah, if it ever reaches into this down close candle. So let's see if it wants to provide any entry using this proportion order block. On the 1 month chart, yeah, we do have several inefficiencies down here after this stop hunt. So to me, this is a good entry if I were just to attack the all-time highs. So the requirement is that it has to move below first before attacking this high. That would be my requirement for Amazon. Next we have Meta. All-time highs with no down close candles, except for this consecutive down close candles that took out all these lows here. I think this inefficiency here is good. It's a good place to accumulate if you're bullish on Meta, because this is a down close candle and this is an inefficiency with the breaker, so it's a unicorn setup. I just don't like how it has so many inefficiencies down below. Preferably I would use the order block as my entry. So in terms of order blocks, I would use the opening and I would use 25%. Opening and 25%, that would be my prices for dollar cost averaging into Meta if it ever reaches that low. Okay, and that would be the only price that I would buy to look for higher prices as of now. Next, Tesla. Right, so for Tesla, we have closed above this down close candle here, this high. Yep, so right now we're just waiting for fair value gap to form. Yep, we're waiting for a fair value gap to form. On the monthly chart, we have this fair value gap right here. If you're entering on the monthly chart, this would be the place whereby you want to accumulate. But personally, I think that this order block would be a much better gauge of levels to accumulate. In the middle of 0 and 25, that would be the maximum buying entry if I were to look for high prices on Tesla. But again, because it's in all-time highs, the likelihood of it retracing down that low and then higher, that would be very low. At the same time, on a monthly chart, we're closing below this high here, quarterly as well. So we are basically back inside the range, and this could mean that this right here could just be a stop hunt. Okay, so I have to be very cautious about Tesla because overall we are in a accumulation profile. It's not an expansion profile as compared to the other stocks that I have mentioned that we have went through. So TSMC expansion profile. Not much information from this one, but this down close candle here is a potential proportion on the block because it has reached into this consecutive down close candles. So my eyes is on this order block right here. So you can just do the grading right here. Next, so it's going to be like lower and then higher. That's what I'm thinking. But the higher, because I have nothing on the left, it would be the previous all-time highs, which is this level right here. Walmart expansion profile, lots of inefficiencies, no logical entries for now, just let it go. JP Morgan, it's the same thing, lots of inefficiencies on the highs. Coming back down into this order block doesn't make sense because we are in a expansion profile. So let's see if it wants to consolidate around here. Next, Visa 3 months, inefficiency higher, wait for a fair value gap right here if you want to attack the previous all-time highs later on in the year. In terms of proportion order blocks, do we have them? We have this one. So the only price I would buy for Visa is this candle right here. Next, ExxonMobil accumulation here, nothing much to see. We have closed below this this up close candle, so we're probably going to drive below here because we have accumulated, we have consolidated after this run higher. So it could be something like this, run out the lows and then continue higher, and that could be possible, but it's not something that I would like to look to trade because it's in a accumulation. United Health, same thing here, accumulation. We have this fair value gap, and it seems like this fair value gap is not enough to send the price higher. It's coming back for it, and if it does, we look for this down close candle here, because this down close candle is the last one that provided the stop hunt, and then it traded higher. On the way up, there was no proportion on the blocks, returning back into this down close candle. So the only logical price I would buy is the down close candle right here. Oracle expansion profile, nothing much to say. Same thing for MasterCard. It has utilized this to expand higher. Yeah, it's probably gonna continue to go higher. Let's see if it forms a fair value gap down here. We have the volume imbalance. If it is very weak, it's gonna drop back down into the volume balance next quarter. Let's see. Moving on, J&J consolidation profile, messy price action, a lot of back and forth, so skip. Expansion profile as well. This down close candle here is the only thing that I would buy. The levels here between 0 and 25 and 25. I wouldn't even consider any any inefficiencies here because there are lots of them, right? All-time highs as well. So next, Coca-Cola looks really weak because if we take a look at this candle here, this is we should respect this 3 down close candles here, because this 3 down close candle was the last top hunt inside this down close candle. So this will be the proportion on the block. We have closed above at this candle, so any price returning back into this candle here should be respected. but look at the closing price here. Alright, soft invalidation will be closing below 50%, and then we can look for reversals into the lows down here, or maybe even short-term targets and this lows down here. Other than that, if it was able to touch 50%, it needs to expand away quickly. Okay, this is for Coca-Cola. Next, Salesforce, same thing here. Inefficiency, respecting. We have inversion fair value gap right here. Higher prices. I would utilize this down close candle here as my levels if I were to buy in this stock right here, say Salesforce. Okay, next, Wells and Fargo's. This down close candle here, and then this one is an inversion. I mean, not inversion, but proportion. This order block here, I would take notice of this order block for Wells Fargo, sorry, to see if it wants to retrace back down here to higher prices. This is the only price I'll buy. Adobe, 12 months fair value gap. Yeah, it seems like we're returning back into this fair value gap. It doesn't look too good for Adobe. A lot of back and forth price action on the monthly chart and on the 3 months chart as well. This 3 months fair value gap seems to be very, very weak. At the same time, we have wickless candles down below, so this could be the draw on liquidity. If we are to close below this bullish fair value gap, I think the next draw on liquidity would be the lows down here. Not very bullish on Adobe for now. It needs to prove itself. Next, McDonald's. This candle needs to hold. It's a proportional order block. Look at how it ran the stops here. Traded higher, closed above, came back down as a down close candle, closed above, utilized this down close candle to send price higher, and then right now we are consolidating. Next, IBM. We have fair value gap here. It might want to reach into the fair value gap and then push one more time above this high. Right, next, Uber, bearish. We took out this high and then we are right now trading back into the range of the consolidation. And this fair value gap here is the next strong liquidity. Nearest inefficiency would be below this low right here. I think this is possible. We don't have any clear down close candles here unless I'm only using the bodies. In that case, I would need to see a reaction of this 25 and 50. If not, we're going to attack new lows for Uber. Nike, bearish still, but we don't have any proportion candles. It's trading inside this previous candles range. I think reaching down into this level here shouldn't be a problem eventually. All the stop down here. It's really bearish because it can't even reach into this inefficiency here, which is good because that is breakaway gaps, and you want to see breakaway gaps when you're bearish. Breakaway bearish fair value gaps. Okay, now next, AMD. 3 months we are trading back into this candle here. Let me check this candle. Opening and close 64.46, close. This is an up close candle. Okay, moving 50%. That would be the last chance for AMD to prove itself. However, if you take a look closely, we have closed below this fair value gap, so this is not a good sign for AMD. Yeah, it needs to prove itself. It needs to show further evidence of wanting to trade higher. Other than that, then there's nothing else for AMD. Next, Coinbase. I don't like how it has closed back inside the range after trading above this high here. It looks really bad because I was expecting price to just straight up trade above this swing high here, following Tesla's momentum. That was the same. I mean, they should be moving the same way because of the highs up here, but right now we have Coinbase closing back. So to me, this is quite risky if you want to buy in to Coinbase or Bitcoin, for example. Okay, so let's take a look. We traded all the way into the rejection block right here, 50%, and then we dropped. We closed near the lows, so this fair value gap right here is not very high probability. Personally, let's take a look at this 1 month chart. We don't have a proportion candle as well, so it could just run all the way down here into the last down close candle, right? Because there's no supporting factors. We only have the fair value gaps over here and the fair value gap over here. Proportion, yeah, we really don't have proportion on the blocks, so these two fair value gaps should be support, right? Inverted commas, support. They should be support, right? If it ever comes back down, and it could be like it wants to accumulate more before sending higher, and that would be a very terrible price action for long-term investors. So let's see this one, Lululemon. To me, this looks like a high resistance liquidity run if it was to eventually trade below, right? Because of the level of retracement that it's going through right now after taking out this swing high. So on a good sign, we have not closed below this bullish fair value gap, right? If you look at the candle bodies, so if it was to trade higher, it's going to look like seek and destroy, right? If you take a look at the previous swing lows and swing highs, it's already hinting seek and destroy, because for seek and destroy, it is a expanding market profile. Okay, moving forward, moving towards the next one, PayPal. PayPal is interesting because we have this down close candle here, we closed above, we have formed a fair value gap down here, we have an inefficiency above. The only problem is this 1, 2, 3, 4, 5. This 5 consecutive up close candles is your bearish order block. Okay, so it's going to be an uphill battle for PayPal. But if you look at it in a risk to reward, let's just say you long over here, your stop is down here, and you look for this one right here. It's 2.4R. To me, it's quite okay. All right, to take the risk, and I think this is a good it's a good trade idea in my opinion, PayPal. Right, because of the consolidation right here, it has refused to trade lower. It only traded into all the inefficiency down here that was previously used to support the price higher. Look at this candle dropping into the inefficiency, and then it sends the price higher. So to me, we are right now in a speed bump because of this BPR right here, this balanced price range, and or if you want to call it inversion fair value gap as well. Yeah, we're reaching to that level, so a speed bump is expected. However, I can't discount this consolidation right here in a bullish fair value gap, so this could all be a stop hunt to go higher. Okay, so this for PayPal. I'm looking for higher prices on PayPal, and that this trade right here, I think it would be a valid trade. I like the idea. Okay, next, Boeing. Wait for it to take out one of them, which is the high or the low, because if you take a look at it, it's contracting. It's closing in on the range. Ultimately, I'm still bearish as long as it's staying below or within this fair value gap here. I will be bearish on Boeing. All right. Next up, coupon. It's inching above this fair value gap. However, if we take a look at the monthly chart, let's take a look. The last stop hunt, the most significant stop hunt, is right here. This down close candle at this low. We still have not closed above the opening price of this down close candle and above the high, so we're stuck inside this range here. We have lower time frame stop hunts, but I don't really want to depend on that when you have a larger time frame stop hunt. I mean larger range that you are in. So this could be range bound for now. And we have an inefficiency down here, relative equal lows down here, so it's a tricky one, to be honest. Let's see. Yep, I would prefer to wait for it to give me more information, because it looks kind of like PayPal, but I need more information. Okay, so this is for coupon. Okay, next, NIO. So we're moving on into Chinese stocks. Ultimately, I'm still bearish. I'm looking for NIO to make all-time lows. This hasn't changed ever since the start of I'm not sure when, but ever since the start of the time whereby I gave the call for Baba to attack new all-time lows. It's the same for NIO. Right, moving on, JD, same. Look at the lows down here. They're just primed. It's too smooth, right? Right now, what it did right here was to return into a small little tiny volume imbalance. And then we have this candle here, this up close candle, which is a bearish order block. And then we have this huge inefficiencies. At the same time, if you look at the price action here, it's very balanced, back and forth, back and forth, back and forth, until this small little inefficiency here, right? So to me, new all-time lows should be expected for JD. And if we take a look at new, just a comparison, right? It's much cleaner price action. Fair value gap, drop, fair value gap, dropped again. Alright, so yep, they're all really bearish. Luckin Coffee, it is a mix to me for Luckin Coffee. Right, we have this fair value gap from this high to this volume balance. We closed above the first time, and then the second time right now we're trading back into it. We're playing around inside this fair value gap. As long as it does not close back below the 50%, which is right here, I would lead towards trading to $40 for Luckin Coffee. Okay, this is a fair value gap right here. We're still staying above 50%, so that's a good sign. On the monthly time frame, it has traded into the last down close candle right here. That took out a short-term low. Look at the reaction of the 25%, right? So if we can close above this down close candle, it would validate this down close candle as the proportion on the block, and then we can use this as an entry to look for the highs of here. That is the plan for Luckin Coffee, so just have to wait and see. Next up we have Tencent. To me it looks like it wants to reach for this inefficiency here, and if it drops after reaching into this inefficiency, then it's a high resistance liquidity run. But take a look at the bigger picture. We'll have this price still staying inside this inefficiency. This, we traded lower and then we traded higher. Look at the reaction of the 50% level here once it closes above, right? So this is a significant inefficiency, so as long as we stay above 50%, we are bound to trade higher. Yep, overall accumulation for Tencent, I don't really have any read on this one on the higher time frames. Alibaba, if you take a look at what it has done, it's basically trading back to the inversion fair value gap, and it has issues trying to trade above even the 25% level. Okay, and then we have two equal lows down here. So same thing, I'm still looking at Baba to make all-time lows, similar to new. PDD, 拼多多. Okay, we have this stop hunts here. To me this looks like a low probability chart to read off from, similar to Tencent, and this one is slightly more difficult. It's just ranging, so just wait for more information. Next up, what do we have? That's it. Okay, let's see. I do believe I have some more below. I'm not sure why it did not register. Okay, so C Limited, I think it's gravitating towards this fair value gap here. I can use the down close candle right over here for entry into this high here. but because of the structure, it's a risky play to me, right? It's a risky play, and the risk to reward is, I don't think it's the best. Yep, it's only 1.6. It's not the best. I would prefer PayPal as compared to C. They both have similar structure. Okay, now moving to Singapore stocks. SIA on the higher time frames, it's accumulating, and I'm still looking for this high to be taken. I'm still bullish for SIA as long as we are respecting this down close candle here. I think it's fine. Let's take a look at the higher time frame. This one, this candle right here. As long as we are respecting these consecutive down close candles, we should push towards this high because we have closed above, right? So any prices at 25 or the price between 0 and 25 and 50%, these are all buying entries, dollar cost average, to look for the highs up here, right? As you can see, it has provided multiple entries here, but for Singapore stocks, they move very slowly. So this is just like analysis. It's not like a recommendation to buy anything, right? DBS, similar to all the banks, they are pushing higher because interest rates are getting higher. Capital has been the same since last year or 2 years before. I was looking for these highs to be taken, and eventually I'm looking for all-time highs for Capital, and let's see, still waiting. The move has already been made, has already been played. So if we take a look at this inefficiency down here, this was the entry, right? We have inversion, we have this swing high taken, this is a breaker, we have fair value gap, right? So you have a lot of things aligning together with this inefficiency, which is why it is a good buying opportunity at the point of time whereby this inefficiency was still open. Right now, because we are taking out the stops here, I think it should be ready to move higher. This one, SemCorp, expansion profile accumulating at the highs. I don't have anything for this type of profiles. Citrum, I am not sure why this is the most traded stock on the Singapore exchange, but right now we are stuck in a range between this low and this high. We have a very bearish fair value gap right here. I'm not sure what happened, maybe it's dilution of shares, but this is the current flow right here, and I would lean towards bearish until we can close above these 3 consecutive down close candles. Right, moving forward, we have Capital, Land, Invest. we're still bearish for this one, but look at how it left these equal highs up here. Eventually I think it's going to come back up into this level here at 3.2. It might just want to, you know, make more lows before coming back up here, because this right here is too clean in my opinion. We have equal highs at a fair value gap. There's Kaplan China. Then this one is, to me, just skip this. Alright, moving forward, I mean right now we are in Bitcoin. So Bitcoin, let's take a look. We are overall still bullish. We have been making all-time highs and price is respecting bullish order flow. The issue now is that Ethereum is not moving. Okay, Bitcoin is moving a lot, Ethereum is not moving. when you look at Ethereum, we're stuck. Okay, so we have this SMT with Bitcoin, and then it graduated, it expanded higher, and it came back down. It discount, that's a really large retracement if you were to ask me, right? Discount fair value gap, and then we traded higher, unable to clear this high. Okay, we're stuck at the rejection block right here. Look at the number of times it has respected the 25% level. Even after we traded back into this discount PDRA, this is a fair value gap, it is still unable to close above 25%. Taking a look at the monthly chart, it's quite messy for Ethereum. Okay, back and forth with this inversion as well. So this is a very messy price action as compared to Bitcoin, which is so much cleaner. We have this inversion, fair value gap, and price utilize this fair value gap to send it higher. Okay, so Bitcoin is so much cleaner, and right now it's just like a decoupling between Bitcoin and Ethereum. Therefore, I don't really have a clear read, but if just based on the price action itself, I'm bullish for Bitcoin, sideways for Ethereum. Okay, no entries as of now because it's all-time highs. You always want to wait for retracements, especially on crypto, because of the strong retracements that it provides. Okay, same thing as Solana, it's unable to close above this high here. The alts are very weak right now as compared to Bitcoin. Now moving on to gold, unfortunately there's nothing I can cover. We are still trading higher. We are in a expansion profile right here after this huge consolidation. Same thing right here, consolidation, expansion, consolidation, expansion. So probably looking for another accumulation if it wants to, and then expansion again. So that's for gold. It keeps on pushing higher and higher, just like the indices. Okay, next, this is oil. For oil, we are still not able to close above this down close candle here. But if we take a look at the longer chart, what is it? US oil. Alright, same thing as I mentioned before. This right here is a stop hunt. We are still respecting this down close candle here. Okay, so any prices trading into this down close candle, to me it's a buy. However, you need to consider the market profile that we're in is a accumulation profile. Alright, we took out the stops up here, we came back down, staying below this high, so it is not expanding anytime soon, and it's still in accumulation. We've taken out the stops here, we expanded higher, and then we came back down again. So overall, this is a stop hunt. This right here could be a minor stop hunt, and then we can trade lower for a longer period of time before it decides to want to move higher, because this is a commodity, so real life supply demand affects this price action here. Alright, so with that said, neutral to bullish on oil in the long run. Okay, so for bonds, they should move together with the dollar index, but this one in particular is the interest rates. I'm looking at 5.5%. Right, if we take a look at the is it 3 months? No, it's a 1 year chart. We have closed above this down close candle. This is the same analysis that I made previous year, which is the year 2024. At the start, I've made this analysis whereby at any point in time, if it trades into this fair value gap here, it's a upward move because we're looking for the highs up here. So the same thing is still in play. It's just that right now we are closing in an inside candle here, anything could happen in terms of we can trade lower here first and then go higher. That is possible. Or it can trade higher first and then drops below, but eventually trading higher. Okay, so this is the interest rate. Okay, next, we're back in the dollar index. Okay, so I'm pretty much done with the outlook for the year 2025. Just keep in mind that we're in the third cycle, which means the Q3, third quarter of the 4-year cycle of the US presidential elections. Therefore, based off the first two quarters, first two cycles, okay, first two quarters, based on the first two quarters, we are still going to anticipate higher prices, and that would mean that it's going to form the ultimate top, I would say, right? When we have 1 expansion, 2 expansion, and then 3 expansion, and then you look for SMT between the 3 and the 4th quarter, SMT on the highs, and then the 4th quarter would be a major reversal. So that is what I'm anticipating. Okay, how would I describe that to you in paper format? Okay, so in concept, I'm not sure if I have any examples. Let's take a look at the 3 months. Is there any examples? I don't have any clear examples for you on the 3 months, right? But you'll be able to see this on the lower time frames. It's the same. Higher, higher, blow off top, SMT on the highs, reversal back down, and then let's see if he wants to continue lower. Okay, that is the price action I'm anticipating for this US presidential election cycle, this particular cycle, which means it's gonna be within Donald Trump's term. Oops, excuse me, haven't fully recovered yet, but yeah, been doing well, so good. And almost an hour of not coughing while talking. Okay, so but do keep in mind that this is just like a concept. It's not like I'm trying to call the tops. It's all textbook theory, textbook. Applying it to charts usually only works out about 50%. Most of it is based on experience and what you see, what you anticipate, what you expect, and if it doesn't play out, then you just switch, right? So you adapt. So this is what I'm anticipating. We're going to go higher in 2025 and probably slightly higher in 2026, and then we should see a blow off top, and the market is going to retrace hard, especially if we have a fair value gap provided by this year. It's going to attack the fair value gap, which means it's going to attack this year's low. let's do. Right, so the candle for this year is, I'm expecting something like this. This candle for this year, and then we have a fair value gap. The following year we're going to take out the high, and then we're going to draw up inside the fair value gap, and this would be a buying opportunity to go higher if it is going to continue higher, and it's gonna go for the next expansion higher. Okay, this is what I'm anticipating for the next few years to come. However, because it can do something like this, little higher. Sorry, this one. It reaches into this gap here first. It goes higher, and then it rejects, and then it goes way below what we anticipate. And then, if that comes, we're going to look for this low right here as our targets. Okay, but lots of buts, but it all depends on what the price does. Okay, so no point anticipating future movements, because that's way too far. All we have to do is to anticipate what's going to happen in the next quarter or in the next month to make profits. So this right now, what I'm doing is just for fun, okay, because I like doing this. I like to have some conceptual view of the market. So this is why I'm doing this, right? Now if we take a revisit at the true opens, right, as I've mentioned in the old video, the April's opening price is all you need if you're a investor, if you're a dollar cost average player in dollar cost average player in the markets. If you're that, all you have to do is to buy below April's opening price. So let's see what the April opening price does in the year of 2024. Okay, so let me just check when did I post the video. Yep. It's this one. This one right here. Okay, long-term investing, the only indicator you need. This is posted 8 months ago, which is April 2024. So what the indicator that I mentioned is basically April's opening price. Okay, so if we take a look, April of 2024, so this is the opening price. Any prices below is discount. Look at the way it closed above right here for Apple. Okay, moving on, we have Nvidia. Where is April's for Nvidia? Right here. Look at the expansion here. Right, if you're just purely bullish, blindly bullish, this is all you need to do, buying below April's opening price. Right, for Microsoft, April's opening price, it traded above, but right now it has closed below. Right, so over here, April's opening price traded below twice, and it closed above here. So even if it is to fail on you, you're not going to incur a lot of losses, and you would be able to know when would it be to cut loss. Okay, so Amazon, April's opening price right here. Look at the reaction, and it closed above here. Meta, April's opening price right down here. Any price below April's opening price. Okay, just dollar cost average, and you will get it. You will get good profits. Okay, for Tesla, where's April's opening price? Oh, this is so good, right? Tesla, April's opening price is way down here. This is a 2x, more than 2x. Okay, TSMC, April's opening price right here. This is April's opening price. Can you see? Can you see now? This is all you need to know. This is the only indicator that you need to be profitable if you're a long-term investor, dollar cost average, you don't care if the market crashes or what. All you have to do is to just dollar cost average slowly every quarter, as long as it's below April's opening price. So usually you only have two chances at dollar cost averaging below April's opening price. First chance would be the opening price of April. Second would be if Q3 provides a retracement down below April's opening price, and that is when you buy the second time, and then that's it. You finish your entire buying of the year in Q2 and Q3, and then you wait for the year to close, and that's all you need to do, right? Two position building, or should I say two entries, two buying entries, and then you wait for the year to close, right? If you're really super bullish, then you buy below January's opening price. But right now, just take the low hanging fruit, buy below April's opening price. You don't even have to wait that long for the expansion. Usually expands in the quarter, if not the second quarter, as you can see in these few examples that I've been showing you. And you can go through the examples yourself, go and mark out the April's opening price, and then you'll be able to see that it is so simple, right? So with this, I'm going to close this session here. I hope you enjoyed it, and if you found this helpful, insightful, do leave a like, and if you have any questions, do leave it in the comments section down below. The April's opening price, the true opens, these are all from this quarterly theory. I do not have ownership of these concepts. Okay, if you want to learn more, you can go and learn it from him. I'm not the author. I'm not the one who created this. I'm just sharing what I've learned and what applies and what works. Okay, and with this, I'll see you again the next time we talk, which would be the forecast for next week if everything's going well in terms of holidays. So thanks for watching. Have a great weekend. Enjoy your new year, even though it doesn't really matter. Facts, right? And signing out.